Could Bitcoin face a tulip mania situation? You've heard the story before. Some exotic new asset pops up and captures everyone's imagination. Prices creep up and then they explode. Suddenly, your barber, your baker, and your banker are all piling in, sure they've found the secret to getting rich forever. The mania gets wild. People start mortgaging their homes and borrowing fortunes just to buy more. At its peak, a single unit is worth a grand estate. It feels like there's no ceiling. And then, almost overnight, the fever breaks. The price crashes, fortunes vanish, and an entire generation is left with a story about greed and the madness of crowds. Now that isn't the story of Bitcoin. It's the story of tulip mania in the Netherlands, almost 400 years ago. And yet, if you listen to the critics, you'd swear they were talking about the same thing. For years, the tulip mania comparison has been the laziest, most dramatic argument for why Bitcoin is just a bubble waiting to pop. And it's getting louder. Michael Burry, the guy from The Big Short who famously called the 2008 housing crash, just recently called Bitcoin the tulip bulb of our time and said it's actually worse than a tulip bulb because it enables criminal activity.
He thinks it's all just hype. But does this 17th century story about a flower really hold up to scrutiny? Or does it completely miss what makes Bitcoin a revolutionary technology?
The first, most glaring problem with the tulip mania comparison is obvious the second you look at a price chart. Tulip mania was a one-and-done event. It was a single insane spike and an equally brutal crash that never recovered. A classic speculative bubble that burned out in just a few short years in the 1630s. Bitcoin's history couldn't look more different. It's not a story of one pop. It's a story of repeating cycles. Since its birth, Bitcoin has gone through at least 4 major boom and bust cycles. 2011, 2013, the big one in 2017, and again in 2021. Just recently, in December 2025, we saw it again when the price took a nosedive below $85,000, only to rebound sharply days later. Each time, the price skyrockets to a new all-time high, then faces a massive correction, often dropping 70% or more. And every single time, critics pop the champagne and declare Bitcoin dead. Yet after every crash, something incredible happens. The network doesn't die. It stabilizes, the tech keeps improving, and more people start using it. Eventually, the price not only recovers but blows past its previous all-time high. Tulips were a fad. Bitcoin has shown over a decade of resilience. Its price action isn't a bubble popping. It's a series of waves where each bottom is higher than the last. That's not the signature of a mania. It's the signature of a new technology finding its place in the world. This brings us to the most fundamental difference. Tulips were flowers. Bitcoin is a technology. And that's not just semantics, it's everything. Let's talk scarcity. The big appeal of the rarest tulip bulbs was that they were, well, rare. But that scarcity was a total illusion. There was nothing stopping growers from just planting more bulbs. Once the bubble popped, the market was flooded, and the price never stood a chance. Bitcoin's scarcity is the polar opposite. It is absolute, transparent, and locked in by math. There will only ever be 21 million Bitcoin. That isn't a promise, it's a law written into the code, secured by a global, decentralized network of computers. On top of that, the creation of new Bitcoin gets cut in half about every 4 years in an event called the halving. Tulips could be grown forever. Bitcoin's supply is finite, but scarcity means nothing without utility. Tulips were pretty, but that's about it. You couldn't split a tulip to buy a coffee, you couldn't instantly send it across the globe, and it definitely couldn't run a financial contract. Its value was purely aesthetic. Bitcoin, on the other hand, is a beast of utility. It's a global settlement network, a store of value that governments can't censor, and for many, a way to pay for things. It's programmable money. Unlike a tulip, you can send a fraction of a Bitcoin to anyone, anywhere, anytime, without asking a bank for permission. And as for Michael Burry's point about it enabling crime, let's be real. The cash he deals in is the king of crime, and it's untraceable. Bitcoin's public ledger is pseudonymous, but permanent. Every transaction is there for the world to see. Meanwhile, second-layer solutions like the Lightning Network are making transactions nearly instant and incredibly cheap. Comparing a tulip to Bitcoin is like comparing a horse-drawn carriage to a rocket ship. Sure, they both get you from A to B, but the comparison completely misses the technological leap. Skeptics see Bitcoin's wild price swings and scream, "Bubble." Proponents see the exact same volatility and call it the birth of a new global money. The best way to understand this is with the S-curve of adoption. Every world-changing technology, from the automobile to the internet, followed the same path. Adoption starts slow, then accelerates like crazy, and finally levels off. The price discovery along the way is always a chaotic, volatile mess. Remember the dot-com bubble? The internet wasn't the fad, the speculation around it was. Lots of companies went bust, but the underlying technology changed everything. Bitcoin is following that same S-curve, powered by what's known as network effects. Metcalfe's law says a network's value grows with the number of its users. The more people who own, use, and build on Bitcoin, the more valuable it becomes for everyone. If your neighbor bought a tulip, it didn't make yours more valuable. With Bitcoin it does. We're watching this network effect happen in real time. The launch of spot Bitcoin ETFs in the US in January 2024 blew the doors open for institutional money, with giants like BlackRock and Fidelity making it easy for mainstream investors to get in. By October 2025, institutional players had already bought 7.4 times the amount of new Bitcoin mined that year, revealing a colossal supply and demand imbalance. And now, regulations like the EU's MiCA framework are creating clear rules, further legitimizing the asset. This isn't a speculative stampede for a flower. It's a calculated bet on the adoption of a new monetary network.
When you look at the evidence, the Tulip Mania comparison just falls apart. It's a lazy analogy that ignores everything that makes Bitcoin revolutionary. But what do you think? Is Bitcoin a world-changing technology, or do you still see the ghost of a tulip in its code? Drop your thoughts in the comments below. And if you're getting value out of this, hit that subscribe button and turn on notifications so you don't miss what's next.
So, could Bitcoin face a tulip mania situation? The answer is a clear, resounding no. Human greed and speculation will always be part of any market, but the asset itself couldn't be more different. Tulips were a perishable fad with fake scarcity and no real use. Bitcoin is a durable, decentralized monetary network with provable scarcity, massive utility, and powerful network effects driving its global adoption. The volatility we see isn't the death rattle of a bubble. It's the messy, chaotic, but ultimately upward trending process of a new global asset being valued in real time. The real question isn't whether Bitcoin is a bubble, but whether you can afford to ignore a monetary revolution happening right in front of you.